So at the end of this video, I have a trading challenge for you. And to be honest, if you can't pass it and you're already trading live and you're not doing very well, maybe this will be a bit of a wake-up call for you. And I'm also hoping that you're going to hit the subscribe button below and add us to the channels that you just love to watch about trading. Anyhow, being in the business of trader education and system development, Netpicks has seen a lot in over 2 decades when it comes to those that are looking to trade for a living. And one obvious thing to us is that learning how to trade and make money and develop as a trader has more to do with process than hitting on a magical formula. And it's fantastic, really, to find a tried and true strategy, such as the ones that we develop. A little bit of a plug there. But if you don't have the right mindset and methodical approach, I think you're going to have issues. You're going to struggle to understand the difference between something that takes a few losing trades and something that just doesn't work. By using a trading journal, you can track specific metrics and you can identify their precise impact on your P&L over time. And before I go on, I have a free indicator blueprint that was put together, and it dives into the pitfalls of indicators and ways to improve how you use them. You can click the link above or in the description and you can just download that. Now, single trade outcomes do not guarantee your success or your failure. So the problem is that when you take a loss or you get a good winner, you're often not in the most objective frame of mind. The emotions that trading can draw out of you can be strong, and they can create powerful memories about what works and what doesn't work. So a few great winning trades or really bad losing trades can make a trader decide whether or not something works. But the logic behind that's flawed, because conditions can be exceptional. For example, there could have been some really big major market moving news, or there could have been execution errors that impacted the outcome of the trade, or there just could be a string of reasonably expected losses. So without recording accurate results over the course of a reasonable sample set, you're relying on emotionally rooted memories of certain trades. So learning about the strategy from a decent sample of trades when you're in an objective state of mind is a much more dependable path to follow. And that's something that Netpicks has hammered home to thousands of traders over the years, especially when you're back testing your strategy. Emotional learning, it fails in consistency. So the emotional type of learning can explain to some degree why there are so many traders they jump from system to system, and also those who will not let go of a strategy once it no longer works. The system jumpers, they get nervous about a system that shows a few consecutive losses, or they just don't recognize that they are making mistakes in the execution. One thing that we teach our traders, and you might want to copy this, is produce 25 error-free trades before you consider putting real money at risk. Not 25 winners, just 25 error-free trades. And the clingers, the ones who don't let go of their systems, they refuse to believe, even in the face of the stats, that their strategy is not profitable. They remember the great winners that it produced in the past, and they believe that the next one is just around the corner. Even worse, if they give up on it and the very next trade is a winner, well, that's only likely going to give them renewed false hope in the system. So log everything you do and assess the results. To properly assess your performance, you have to focus your efforts on accurate strategy execution and logging your trades properly rather than the actual outcome. Because every strategy, it doesn't matter what you're trading, is going to have losing trades. So the outcome of an individual trade, it should be irrelevant. The only factor that's relevant in regards to each trade is that the trades were taken in accordance with your trading plan. The conclusions that you're able to draw from your results are more likely to be reliable. Additionally, if you make sure that you periodically review your results, weekly, monthly, or every 30 to 50 trades, rather than interpreting them as they happen, you're going to get a much more accurate and objective picture of how good your strategy is. If you're going to survive as a trader for a long time, it's important that you learn and adapt with changing market conditions. And even the best traders, they're constantly learning. But there's a big difference here, because the best traders make every effort to learn. They observe, they log, They theorize, they test, they review. They excel at interpreting the often ambiguous nature of trading results and the market activity because they are diligent students. So make sure the lessons that are available to you as a trader are learned when you're reviewing your trade log and not in the heat of battle. So you ready for the challenge? This is the one I mentioned at the start of the video. Trading's tough. And a lot of people think they're ready, but they're not. They're not always ready to make the commitment. And oftentimes they've blown out a trading account to learn that they're not ready. So I want to give you a simple challenge where I want you to see if one trade's outcome influences you. Does a win get you excited where you think you found your edge? Did a few losses upset you enough to quit the challenge? Now in our trading tips blog, there are a few simple strategies that you can try, not for the sake of overall results, although you could do well with them, but try to see the effects winning and losing have on you. Use a demo account. Do not use real money, if ever, on what you're about to read or hear or watch. Trading bull flags, that's a viable approach to trading because it takes into account a natural move in the mechanics of any market. So if bull flags or bear flags are interesting to you, check out the video that I have linked above. And you can use it on any time frame that suits your schedule, but I personally prefer daily charts in the majority of my trading. You can also download for free our price pattern guide, and it should help you on the road to trading certain patterns that actually have an edge. And that link is above as well. Using the 50-day moving average as part of a strategy is something that a lot of traders look at. It's pretty simple. Complex does not always equal success. And again, you can use a time frame that fits your schedule. And you can learn more about the 50-day moving average trading strategy up on the link here on the right. But whatever you use, remember what we're trying to accomplish with this challenge. Can you keep emotions out of the equation and focus on results over a basket of trades? Can you do the 5 things that successful traders do? Observe, log, theorize, test, review, to learn more about the approach that you're taking with the market. And this is going to take some time, but the markets will be here waiting for you when you're ready to trade them.